Hey, casual crypto investor family. It is the casual crypto investor, and I am back with another video. I hope everyone's been doing well. I have some news in regards to the Clarity Act. Sorry, got a little tongue tied there, but this was a date that I had circled on my calendar. I'm sure as many of you guys do as well had this date circled on your calendar, but unfortunately, the bad news, the Clarity Act has been somewhat postponed. But I got some news and I got some information in regards to another date in which they're looking to have another meeting in regards to the Clarity Act. So obviously the market is kind of mixed right now. It's actually kind of, I think, somewhat reacting to that a little bit. But nevertheless, I think overall in general, the market has done fairly well over the past couple of weeks, especially looking at Bitcoin. I mean, look at Bitcoin. It's almost getting close to $100,000, sitting at $96,000 right now. But I do have some information in regards to obviously the Clarity Act, as well as some XRP news. And so let's get into it. So again, looking at Bitcoin sitting at 96K right now. Ethereum has done well over the past 7 days, sitting at over 6.5%. XRP, it's been kind of rough, despite some good news that actually happened yesterday, which I'm going to quickly share. But XRP sitting at $2.09. So again, still holding over $2, which is good to see, but hasn't had the run up like Ethereum and Bitcoin over the past 7 days. All right, moving on. If you would like to stay updated with me, feel free to follow me on X. Sometimes it's easier for me to tweet than it is for me to make a video. I'm still very active on there. And so, make sure to stay locked in with me if you want to stay updated on what's happening with the casual crypto investor, as well as what's happening in the overall crypto space. All right, so a little bit of XRP news from my fellow XRP army, my fellow XRP fans out there. We had some news that came across my desk yesterday, and I wanted to share this information. So it says right here, Ripple's massive license victory hides a structural shift that could actually divert volume away from XRP. So let's get into it. All right, so we shall see, but I don't necessarily think it's going to divert volume away. I think it's actually going to maybe extend its reach in regards to getting adoption with a lot of the European countries. But I'm going to share this article with you. All right. It says right here, on January 14th, the crypto-focused payment company announced it received preliminary approval from Luxembourg's the Commission des Surveillance des Sector Financier, sorry if I'm murdering it, for an electric money institution license. All right. So again, Ripple is slowly but surely just planting little flags all over the world. Okay. And so again, the stance I think maybe it might be a little clickbaity, but I think that if anything, that's going to continue to expand Ripple's reach, not take away from XRP. But let's get into it. So it says right here, while the approval is technically preliminary, Ripple has framed the move as the strategic gateway that will allow it to passport its services across 27 member states of the EU. Again, extending its reach. This places the firm on a collision course with the region's traditional banking infrastructure, just as the markets and the MiCA regulation reshapes the competitive landscape. All right. So if anything, I think it's going to create competition amongst the banks. And then also too, as well, it's going to give countries in the EU options on how they develop payment gateways, how do they deploy funds and build financial products and so on and so forth. So it says right here that this combined regulatory build out position Ripple with a dual anchored operation model that uses London to service the UK's deep treasury and FX markets while leveraging Luxembourg to access the broader European single market. Indeed, the regulatory permission are already being stress tested by live banking deployments. Last December, Ripple announced that the Amina Bank has become Ripple's payment first European bank customer. The Swiss-based bank is using Ripple's licensed end-to-end payment solutions for near real-time cross-border transfers. All right. So again, let's kind of like back up a little bit. And so obviously Ripple is a technology company. All right. And one of the columns of this technology company is XRP. All right. There's going to be times when they might use XRP. There's times when they might use RLUSD. There's times where they might just use their software, so on and so forth. Okay. But I will say this as an XRP fan, as an XRP loyalist, okay, I do think that it does increase its possibility of using XRP as a tool to do some of the transactions or to, do some of the processes that it might need to do by using XRP or its maybe sister asset RLUSD. So there might be some instances where maybe RLUSD will be just mainly used, but there might be some opportunities that XRP will be mainly used. But again, by extending your reach, that increases its percentage. All right. So just my thoughts there on that, but let me know in the comments what you think. All right, now let's move on to some juicy stuff in regards to the Senate obviously delaying the Clarity Act. But like I said, we do have some good news. So let's dive into it. So it says right here that the Senate Banking Committee on Thursday delayed its scheduled markup hearing for the Clarity Act after Brian Armstrong, CEO of the crypto exchange Coinbase, voiced opposition. All right. So it says here that the legislation, which passed the House during last summer's crypto week, aims to create a regulatory framework for digital assets. Senator Tim Scott, who's been, very adamant about spearheading this Clarity Act bill, on Thursday announced that the committee will postpone its markup for the digital asset known as the Clarity Act as negotiations continues. He stated that I've spoken with leaders across the crypto industry, the financial sector, and Democrats and his Republican colleagues, and everyone remains at the table working in good faith, which is very, very reassuring to hear, especially in today's climate. Okay. Moving on here, it says that the bill reflects months of serious bipartisan negotiations and real input for innovation, investors, and law enforcement. The goal is to deliver clear rules of the road, which we've been waiting for a very long time, that protects consumers, strengthens our national security, ensures the future of finance, which is what, obviously is looking to be built here in the United States. Moving on, it says that the Senate Agricultural Committee has also scheduled to discuss the crypto legislation Thursday, but rescheduled its crypto bill hearing to January 27th. The committee plans to release its version of the legislative text by close of business January 21. So these are some dates that we'll need to circle on our calendar to see what comes of that, what announcements might be made, and all that good stuff. So currently, right now, as we look at the bill, the version includes over 75 amendments to the bill. CoinDesk has reported in regards to that. It looks like this was released on Monday. Moving on here, it says, however, some companies have exploited a loophole that allows stablecoin issuers to indirectly fund payments to stablecoin holders through a digital asset exchange or other partners, according to the American Banking Association. So again, kind of like one of my things that are kind of popping off with my spidey senses or my crypto senses, it's going to be interesting to see how these banks and just crypto in general collide together or find a way to work together, because the reality of the situation is, the argument for crypto is that, hey, I can stake Ethereum and earn way more interest than if I could by just leaving my money in a bank, right? I mean, the reality of the situation, when you look at just a standard savings account, or even with I can't remember the other banking account, like a high yield interest bank account, like it barely keeps up with the percentage of inflation, you know what I'm saying, with the cost of inflation. So, that's the argument. And so it's going to be interesting to see how the banks and crypto work together or how they navigate those waters, because the reality, I think, as more and more people become more comfortable with crypto, right? I think that people are going to be looking like, okay, I can stake Ethereum and get, I don't know, I'm just using it as an example. I don't know what the percentage is off my hand right now, but I know it's pretty high. I think it's like maybe 5% or 7% or maybe more than that, maybe less. I don't know. But I just know that it's way more than if you just left your money in a standard bank account, which you might get maybe 1%, maybe not even 1%. You might get just 0.25%. You know what I'm saying? In regards to doing that. So it's going to be interesting to see how they're able to work together. Moving on here, it says, after reviewing the Senate banking draft text over the last 48 hours, Coinbase unfortunately can't support the bill. Armstrong wrote saying that there's too many issues. The Coinbase executive noted that the bill provides a de facto ban on tokenized equities, decentralized finance prohibitions, lower financial privacy, erodes the Commodity Futures Trading Commission Authority, and would kill rewards on stablecoins. And I know the banks want to kill the rewards on the stablecoins because that's obviously competing with their line of business. But the reality of the situation is most people like us, even if you're a novice crypto holder, if I gave you two options, you can stake Ethereum and get, let's say 7%, or you can leave your money in a savings account and you get 0.25%. It's a no-brainer, right? But basically, Armstrong is saying that would basically kill the stable coins rewards. Wrapping up here, says he stated that we appreciate all the hard work by members of the Senate to reach a bipartisan outcome, but the version would would be materially worse than the current status quo. Armstrong said, "We'd rather have no bill than a bad bill," which I'm 100% on board with. Hopefully we can all get to a better draft. So we shall see, guys. What do you think the chances are? Do you think we'll get a bill maybe before June, or do you think this thing will continue to battle on towards the end of the year? Let me know in the comments what you think. And also too as well, do you think that the banks and crypto can find a happy medium with the stable coins rewards, like basically staking? Let me know your comments on that. What are some maybe strategies on how they would actually make that work? Let me know in the comment section down below. And again, if you like the content, make sure you like, comment, share, and subscribe. Take care, everyone.